What is the arc that you see happening in real estate tech, and what are some interesting trends that you've seen over the last 20 years?
So there are a few things that are non-debatable. So real estate and construction industry, sort of next to real estate, as a percentage of their overall revenues, has spent among the least on technology. Like if you contrast it to retail, which has had the threat of Amazon, like competing with traditional retailers, retail spends 10 times the amount of money on technology as a percentage of revenue than real estate or construction, which has historically spent among the least out of any industry in the entire country. And so you wonder, like, well, why is that the case? Well, there's a few artifacts about real estate that have led folks to not particularly lean into innovation. First, I would say is a culture of risk avoidance, right? Like buildings need to stand and they need to stand for a very long time and they need to be very secure. The capital that gets invested in real estate is looking for safety primarily more than opportunistic return. Oftentimes, real estate has had this bond-like quality to it that has made it very attractive to institutional LPs who can really scale. And then real estate has also lended itself well to monopolies. So you've had a fixed amount of land. No one can force you to sell a building that's standing on that land. And so a lot of real estate's been passed, and a lot of very successful sort of tax law lobbying over hundreds of years has resulted in a lot of real estate is tied up in a relatively small number of families and institutions. And if you just held that real estate over a very long period of time, you did extraordinarily well. Or if you held the land and you leased the land to others. So as a result, there hasn't been much that has forced the real estate industry's hand about why should I do anything different or better. And I'd say the founding thesis of Zigg was actually a deep fascination with the future of autonomous transportation. Specifically, I was very interested in how electric, shared, autonomous vehicles might radically change where people want to live in the world, which would be a thing that would move the demand for specific real estate in specific places to such a degree that you wouldn't care if a building that you needed to get to was a few miles away or was off Main and Main, but was rather somewhere else. Like historically, real estate value was clustered with public transit hubs. Think about the subway line in Manhattan or think about the BART in San Francisco. The closer you were to these major movers of people, the more value that you had. And I thought that it was possible that next generation transportation, like the robotization of transportation, would actually unbundle the famous real estate maxim of location, location, location from value. And that was going to cause the real estate industry to start to act a lot differently as they needed to attract tenants and retain tenants who have much more fluid preferences on where they want to be. If you had told me that 2 years into our fund's history that a global pandemic, was going to prove this point well in advance, I would have not believed you at the time. And I also didn't really understand how positive this was going to be. It's a horrible word to use because it's obviously a tragedy that we continue to live with this. But I do think in terms of the acceleration of the modernization of some legacy industries, this pandemic has actually moved the world forward faster. And the real estate industry and the construction industries have been hugely impacted by COVID in terms of both the movement of people, where people want to be. Obviously, work from home is a tremendous depressor of demand for commercial space in highly urban environments. And I think as e-commerce disrupted the need for physical retail, like so too is this happening, I think, for a lot of different segments of the economy. The digitization is changing the needs for physical bank branches or the need to do notarization in person or the need to sign mortgage documents in person. Like a lot of stuff is changing quite quickly. Virtual tours, right? Talking about Matterport, right? This was a tremendous acceleration of demand in a world where you need to do virtual tours and there's a lot of people moving around. So I guess what we are observing in real time is that the real estate industry is realizing that the industry is not as stable as it used to be, and it is not going to be as stable going forward. That there are more things changing, whether those things are stuff like climate change or whether it is pandemics or whether it's consumer preferences with Gen Z and millennials who are unbelievably different types of humans than,
Well said.
boomers and others. So I think this is an interesting time to invest in what we invest in the same way that coming out of the '08 regulation and all the changes that were happening that reduced the footprint of big banks, like fintech was just this amazing thematic approach one could have had to venture starting in the '09 sort of 2010 vintage. It's our belief that coming out of COVID, this is going to be a very similar moment for real estate tech. And so we're seeing, similar to like the crypto industry, where is talent flowing? I think we're seeing a ton of very high quality traditional tech talent who's looking at the size of the real estate markets, who's looking at the degree of change that's happening. And they're saying, I think I'm going to go after a really, really big market, be that construction or residential real estate or commercial. And I think the other industry where that's happening other than crypto is healthcare. And so we also look at a lot of things that are in sort of healthcare retail as well. So I find that I'm in a bit of a lucky moment where the thing that I'm qualified to do is also sort of having a major growth spurt and is being roiled by a lot of generational change, even within the real estate industry. The real estate industry is a lot older than other industries within America. The average age of a drywaller is in the late 40s. The average age of a real estate agent is in the early 60s. And so you find that there's going to be some generational change in the industry that's going to cause either the adoption of new tech and trend at a much higher pace, or it's going to be disrupted. I would say there's a few companies in our portfolio that I would accurately categorize as competing with the legacy real estate industry much more than selling to them. And some of those companies are the ones that I'm the most bullish on.